Good morning, everybody. Good morning. Hope everybody's doing well. Happy Tuesday to you, September 9th. I was just going through my money supply tables as I'm going to give a little bit of a macro update here. New chart, brand new chart, very exciting. And I noticed the Federal Reserve won't update their financial accounts for the second quarter, which one needs to recreate the M3 money supply for the United States. They won't update that until September 11th. So there you go. You have to wait 2.5 months, depending on the nation, to get reliable money supply figures. Takes a lot of time. Gonna go ahead and share my screen here. And we're gonna look at, one second. Gonna look at a new chart. All right. The inspiration for this chart was from Jesse Myers. I've heard this chart going around a lot this summer. Global wealth. All right. You're sort of, my own ugly mug is blocking the his tweet, but he last updated this in May 2025. In 2023, there was 900 trillion of global wealth. Today, that number has grown to 1,000 trillion, or a quadrillion. He's got a thread on Key Insights. I haven't, to be honest, I always like to verify things myself, so I haven't gone through every table here. But let's just look at what he's got here, and then let's see, if we can maybe comment on it, improve upon it. I like the idea for sure, but I think there's a couple key points. So equities, that's stocks. It's a global stock market. Bonds, global bond market, which is most of the debt between banks and between institutions. Even though you might have a loan to the bank, like straightforward loan, they're probably going to repackage it, mortgage-backed securities and stuff, sell it to other investors. So as far as debt that people take out, it is true. It's mostly in bonds. All the government debt, for example, is in bonds. And then money supply. This is actually pretty good. Then he's got art, cars, collectibles here, 27 trillion, 22 trillion gold, and then real estate, 370 trillion. And then we got here Bitcoin. You can see how small Bitcoin is compared to everything else. So I like this very much, but I was looking at this and, if he's saying, all right, so my face is blocking it. It says total global asset value right there, 1,000 trillion, $1 quadrillion. He's adding up all these boxes. It is technically true to say that Bitcoin as an asset could go into all of these buckets, right? Or I should say, all of those buckets in value could flow into Bitcoin and increase the Bitcoin value. Absolutely, technically true. What is not technically true is to add each one of these buckets and call it total global wealth. And actually, how he describes it is total global asset value. So I'd say that's even less true. I mentioned this yesterday. This is just an asset and liabilities thing. You can't get away from the accounting identity. He actually is pretty close here in showing assets versus liabilities. So these boxes, Bitcoin, gold, art, cars, collectibles, real estate, all here. Those are assets. Asset first, true. And then here we got global equities, bonds, and money. These are liabilities. Liabilities first. But they match. They don't sum. That's the key thing I would say here. So I've used the example many times. Say you have a house that's $500,000. Okay, that was the cost of the house when you bought it, $500,000. But then you needed money to buy it. Maybe you had it $500,000 yourself, or more likely you probably put $50,000 of your own money, and then the bank gave you $450,000 in a loan. So that equation is the asset, the house value, $500,000 equals the liabilities and equity there, $50,000 plus $450,000. So it's an equal, it's a matching. It's not a sum. It's not a true statement to say that the house is worth $1 million. If you bought it for 500,000, and then the money that went into it to buy it is also 500,000, you don't sum those two things. So that's a key thing with the financial system. You can't get away from the accounting identity. So I'd say he's not exactly looking at this the correct way. It's again, it's not incorrect to say that all of these buckets could go into Bitcoin. Absolutely true, because everybody has their wealth in different places, right? But you actually can't sum all of it up. It's an accounting identity thing. So I wanted to show that. I wanted to show that and build my own money supply out. Here we go. I've got a global balance sheet. Another thing that the real estate market uses a lot is sources and uses. Sources and uses. So the liability side of the balance sheet, liabilities and equity, technically, are the sources. That's the money that you get to use something, to create businesses, property, plant, equipment, inventory, to do stuff. Those are your assets. Those are your assets. So again, it's not a double. It's not a count them both and add them. It's count them both and match them. That's the accounting identity, double entry accounting. So what I'm going to do is I'm going to show liabilities here as a negative, or the sources for global assets, and the uses as a positive. So we're going to build up first the negative, which are liabilities, which kind of seems weird, but that's how it works. So global money supply, I went ahead and bit the bullet and tried to use some IMF numbers. I never really trusted the global numbers before, but since you really had to clean this data, I have broad money supplies, and I've created my own money supply for M3. Like I said, you can kind of work through this. And again, when you macro all this data, it's really rough, but this is probably generally, definitely directionally correct, but it's generally correct too. So you remember I was showing a broad money. The top 5 money supplies was about $115 trillion. Here we got 162. It's actually higher than I thought it would be, but after cleaning the data and just taking what the IMF says for broad money, could be right. So physical currency is included in this. And by the way, physical currency, physical cash is only 9 trillion of this. 9 trillion. All right, so here's money. It's a liability on the asset. Sorry, it's a liability for every financial institution that issues a money-like instrument. This could be a bank. This could be an insurance company. This could be a hedge fund. This could be a money market fund. If you count up all their liabilities and those liquid liabilities that trade like money, that's what this is. All right, then we have the debt markets. IMF, and I have some of my own counted as well. You got to look at mutually exclusive debt markets. So generally, we have the government debt markets first. All right, people understand that. The U.S. Just passed $37 trillion in debt. All bonds, by the way. Those are all publicly traded bonds. This is only through the first quarter because, like I said, I still can't even update the United States through June. As of right now, here in September. So through the first quarter, we got 89 trillion in government debt. Now we got corporate debt, corporate bonds primarily, although loans are also included in this, debt securities and loans. How much is that? As of first quarter, 86 trillion. So interesting. These are worldwide figures courtesy of the IMF, and a little bit of cleaning from data that I know myself, which I think is a little bit more accurate. But again, interesting. Corporate debt, government debt worldwide is about the same. Then we got household debt, some mutually exclusive bucket of debt. All right, so personal loans, credit card debt's a big one for Americans. Household debt, 54 trillion. All right. And notice, by the way, for all of these 3 debt structures, I'm going to take away the money supply because money supply is big, but let's just look at this. So 90 plus 80 would be 170 trillion, 175, plus another 5, 180, plus another 50. You see, I'm just roughly rounding would be 230 trillion in bonds or debt. This is the asset value of financial institutions. All right, so our debt is their asset. That's how it works. But you only, again, to count up this stuff, you only count up the one side, the thing that's easily countable. So that's the debt instruments themselves. All right, so about 230 there. And then, of course, we have the money supply as well, which there's a lot of bonds that go on the other side of this as well. But this is still a liability. It's important to say this is a liability of financial systems. Financial systems. It can be banks. It can be other things. Okay, but we're looking at count up the liabilities first. All right. And if you add all those up together, okay, 162 for the money supply. What did I just say? 230 for the global debt markets. You get to a number that is about 400 trillion. $400 trillion. So it's even a little bit more than his bond market. Close to the bond and money market together, actually. 430, very, very close, actually. All right. These are liabilities first. All right, so this is the debt side of the equation. Remember, what is the accounting identity? Assets equals debt plus equity. You can't get around this. Assets equals debt plus equity. So where can we get the equity value? Well, and actually forgot to put them in the source, but there's the World Federation of Exchanges. They make it much easier than it would be for me to go through individually. And they publish pretty encompassing monthly numbers. Ready? There it is. Public equity markets worldwide. 125 trillion. Pretty big. Pretty big. Notice here, global financial crisis. Again, this is macro. Like, you can't really expect much month to month here. It's just to show you overall the size and the addressable market. Where was the top? It was here, actually. Yep. This was right before Bear Stearns got bailed out, if I recall correctly, or maybe right during the process. Right, so it was a full year before the global financial crisis. 69 trillion. 69 trillion. Where were we at 2 years later? 33 trillion. Stock markets, very volatile. More volatile than Bitcoin, you could even say. 1/2 of global wealth was, in terms of stock market wealth, was eviscerated during the global financial crisis. 1/2. Unbelievable. All right, you see what I'm talking about? I'm talking about global equities here. The stock market only. All right, so we have equity markets, and then we have debt markets, household, corporate, government, and then money supply. There is a, if you look at this now, so I'm assuming this is now total assets. There's a couple things we could say about if this really is correct. Firstly, there's derivative markets. Those are very hard to quantify. Even the Bank of International Settlements has been trying to do this since the global financial crisis. Because derivatives are, they're derivatives of real assets. So, an interest rate swap, you can enter into an interest rate swap with a bank, and there's a zero net present value between you and the bank at the start of the entrance. But then as the derivative moves on, one of you is going to be underwater, one of you is going to be above water. I'm presuming that these derivatives are kind of accounted for in the debt markets. It's not necessarily all true that World Federation of Exchanges does give a open interest value for options and futures. But I'm not quite sure I should put that in yet, to be honest, because I think it might be double counting some of the debt that's already here. Anyway, this is, not for sure wholly scientific. It's the first pass that I've made at trying to do a global balance sheet. But I was sort of inspired by what Jesse did. I think it's a good pass here. But again, so by the way, let's add up. Let's see what he has here. So he's got 318 trillion in bonds. Let's look at the equity and liabilities. He's got 318 trillion in bonds, 135 trillion in equities. All right, so that's 450 trillion roughly, and then another 130 trillion in money. That's 580 trillion. What do I have in total? I should have put the total here, but it's got to add these. So 125, 180 plus 260, 265 plus 90 is 345, 445, 500. I have 500 trillion. So a little bit lower than his number, but not bad actually, pretty close. So it's good to know if you want to cross-reference things. But then the key point or the key difference here is you can't add this on top. You can't really do it. It's one of these things are the sources to buy the assets. The other things are the assets that you buy with the source. All right, they balance. So now to do that, I'm going to put assets on the top. All right. I'm not going into global real estate or whatever. I'm just counting up all the things that we know are liabilities for the real economy, which is on the bottom side, right? And I'm adding all that together, but I'm taking away gold, silver, and Bitcoin because that's obviously what we're interested in here. So what's the total there? You see 496 trillion. It's not exactly matched. I'll show you how it will match in a second, but this is how it would look. All right. So one is an asset, one is a liability. And if you want to chart that over time, the easiest way to do it is make the liabilities negative, the assets positive. I want to stop lecturing after this, guys, so let me know if you have questions here. But so again, global assets, something like 230 trillion before the global financial crisis. And then they fall all the way down to 193, 190. Yeah. Big fall. And the only way that they can keep the exponential growth train rolling is to, print more liquidity, which they've done. You see a big pump here. We all know what this was. And also here too, by the way. We all know what this was. Just before the crazy days, we're at 350 trillion in hard assets. By December 2022, 450 trillion. Now, nearly 500 trillion. But like I said, notice the title. This is non-hard assets. All right. So first of all, how would I find total assets? I just sum up the liabilities and equity. That's all you would do. I'm summing them up. But I'm removing 3 hard assets that we're interested in. Okay. And they're going to be very, very small lines at the bottom, the core of the asset side. So first I'm going to show you silver. Nothing. Think about how many. There's a whole cottage industry about silver newsletters. I got no problem with silver or gold. I really don't, but it's very funny. People make a lot of money on silver newsletters. 1.2 trillion in available silver value as of this moment, which means about 2 trillion has been pulled out of the ground all time. But again, silver at least 50% is always churning through industry, so it's not an asset. It's just it's an expense. It's on the income statement. It's not on the balance sheet. Not much silver to save. Now let's put in gold. All right, this pulls the line up more. It pulls all these lines up more on the asset side. Gold, you can start to see a little bit those coins. What's the gold balance as of March 2025? 18 trillion, 18.5 trillion. And then Bitcoin. Now, this is only Bitcoin through March. Market cap of Bitcoin. Do you see it? See it come back on the chart? As we're primarily interested in how Bitcoin is affected with all this stuff, this is how it looks. So this is a slightly my attempt at revising what Jesse did here. Again, it's not incorrect to say that there's a $1 quadrillion worth of different things to invest in around the world. But actually, if you do it, if he's going to call it total asset value, I would dispute that. Total asset value is in fact about half this. It's about half of this. You can only count up one side, and then the other side has to match it. You just can't get away from the accounting identity. Assets equal liabilities plus equity. So we've counted up the liabilities and the equity on the negatives, and then the asset side is a trivial summation. So if you want to look at the easiest way to count that up, take the total non-hard assets, 496 trillion, add silver, you get into 498 trillion, add gold, roughly another, 516 or 520, and then Bitcoin as well, 520 trillion. 520 trillion, that's my count. I wouldn't say this is like, a fine-tooth comb accurate. I'll try to keep, refining this, but I do have pretty good money supply data. Actually, in my opinion, better than what the IMF reports. It's kind of goofy for broad money, but this is about how I would say you could add up the balance sheet. For the world. So, what can we conclude? I would actually conclude a couple things here. First of all, Bitcoin still remains a flea, but so does gold. Gold is also a flea. All right. How long has Peter Schiff been talking about gold and ripping off old people while saying that Bitcoin is going to zero? Gold also hasn't, something to ride home about. Well, of course, as we know, the growth of Bitcoin, let's take them all off. The growth of Bitcoin relative to everything else is gangbusters. This monthly frequency, it's jagged, and as we know, we're over 2 trillion again. All right, right now. But this only goes to March because money supply data is extremely terrible to collect and go through. But anyway, shout out to my Finnish friends. We were talking about this, and I actually heard a bunch of people talking about this global. It's a good way to look at it. I understand what Jesse's doing here in the global asset landscape, but you shouldn't add everything. You should only add the asset side versus the liability and equity side, and they need to match. By the way, I'm not saying in practice they will match, right? There's this idea. Well, let me go back here. There's this idea. It's called rehypothecation. All right. It is not the definition of fractional reserve banking. Rehypothecation means you have an asset like gold, like Bitcoin, like real estate, but that asset can have collateral value with a bank when you say want to take out debt, say household debt here. And the bank, if they're not doing their due diligence enough, could put multiple loans on the same asset, right? Now, usually that will be limited still to the 100% value of the collateral, right? You can have a junior debt, a senior debt. Go back to our house example of $500,000. You could have $100,000 from a senior bank and then $100,000 from a junior bank. who would have secondary collateral, secondary collection if something goes wrong and you have to sell the house. The IMF, in other reports I have seen, has estimated that collateral rehypothecation, I've seen numbers like 3x. That's a whole other can of wax. All right, so that would portend that whatever people think, if they think they have, 500,000 in, and this is actually a product of derivatives, by the way. So again, maybe I need to put open interest here. I'm not sure, but basically, you would take this 500,000 trillion and divide it by 3. That would be the extreme version. Is you take the $500 trillion number divided by 3. That would be the actual asset value on the market, and all this debt remains. But even there, I probably didn't say that right, because they're probably talking about equity. You can also collateralize equity itself, which is a liability. So don't get me wrong, financial markets are confusing. It's hard to try to put it all in one simple chart, but rehypothecation is another wrinkle in all this for sure. But going back to where Bitcoin is, what it does, why there's such an opportunity still, is we can see how small it is compared to everything else. So I'll keep track of this. It's I think it's a decent look. Also, for the hyper Bitcoiners, or the people that think like sort of everything is going into Bitcoin tomorrow, even if there's a 2008 style crisis, right? And let me just show the stock market, just to show you how, just the stock market, right? So stock market values, again, that's an equity, so it's on the negative side of the balance sheet. Your personal balance sheet, if you held the stock, it would be equity, and the holding of the share would be your asset in your personal balance sheet. But if you have a 50% liquidation, right, in the markets, look at actually, once you add in all the other stuff, right, household debt, corporate debt, government debt, and the money supply, there's not really, you can almost see how easy it is for them to sort of paper over, to keep going. That's why when people talk about, a crisis of confidence or the whole system's going to collapse, I mean, people have been apocalyptic since the times of Jesus. He was a pretty apocalyptic guy. They're going to try to paper it over as much as they can. And my point is, as much as I would like Bitcoin to become, the new sound base money of the financial system, and I believe that it will, I think it's going to take some time. All right. There you can see the difference in values. $500 trillion versus 1.6 trillion as of Q1. As we know, Bitcoin's over 2 trillion now. So anyway, I think it's a good one. I think it's just to show everybody where where we're at, what it means. let's go now to my old Bitcoin versus fiat money. Sorry, one second. Super hot here again. Amazing. Thought summer was canceled and now it's back. Gonna show you Bitcoin versus the major assets in the world projected out as a market cap. And we see when we can get to numbers that are close to, say, first of all, any one of these things. All right, so let's say household debt, we generally 50 trillion, and that's going to keep growing, by the way. Bitcoin will grow and also household debt will grow. Government and corporate debt, roughly 90 trillion. It's going to keep growing. So let's try to do that projection. Ideally, I'll get all these onto one chart again so we can see how they work. It's coming. All right. So here's gold again. It's when Bitcoin's going to cross gold. So let's put gold back. Remember, gold's an asset first. So gold right now, $20 trillion in value, available gold. All right, Bitcoin's 2, 10% of it. Gold is actually on a way slower trend historically, and it's way above trend right now. Okay, we're $20 trillion gold right now, and the trend should be 13, which is funny. If you look back from, Peter Schiff, when Peter Schiff first started poo-pooing about Bitcoin, which was all the way back here, gold's actually on a pretty slow trend. Anyway, when we cross it, and this is another interesting thing, again, this is just how the numbers work. Even though gold is 20 trillion right now, it's projected with the trend that gold will fall back off. Maybe it won't, maybe it will. I'm just looking at the data through the life of Bitcoin. They'll pass at 20 trillion in less than 10 years, 8 years. All right, so with gold's projected in my numbers to just move sideways, basically. Could move up, could move down, but sideways for 8 years, and then we'll pass it. Now let's put another one. U.S. Treasuries. All right, now U.S. Treasuries are only, all right, so this is our 37 trillion in government debt, U.S. Treasuries. This is only a portion of this number. Whoops, this number. All right, so our treasuries are government treasuries worldwide. By the way, this includes state and local. 90 trillion. So the U.S. government is like, whatever it is, 40%. 37 on 90 now. And this again is back in March. So let's look at the treasury value back in March. March was 36. So already put on, 800 billion. Anyway, the point is, let's just look at when we will pass treasury, only the U.S. government's debt, all right? 2041. And look, the projection is growing at 7.4% CAGR. 2041. All right, so if we imagine the rest of the debt as well on top of it, and here I just can't do it other than to say, we'll say roughly 3 times the value. But again, it doesn't work linearly, so I can't exactly do it without charting. But let's say, I don't know, probably before 2050. Point is, I need to chart this out now for all these other little buckets of wealth, buckets of value. It's going to take a long time for Bitcoin to pass it. So, again, I think Just find comfort in it. Don't have Maalox moments every day. You know, your conservative news hosts are going to go for clickbait. Your liberal democratic news hosts are going to go for clickbait every day, every silly season. Bitcoin's just going to keep churning on, even though they're going to continue to print money and paper over things like that. I think I've lectured enough. Who has a question? If you do. But it's a good thought experiment, just to go back to Jesse's sort of landscape here. I agree with this very much. It's just you gotta cut it off in half of this equation. You don't sum the values. If my house is worth $500,000 and then there's a loan of $500,000 on my house is not worth $1 million. There's just, they match. So government debt, corporate debt, household debt, equity markets. All right. Little less than 400 trillion. Add the money supply. Takes it well over, not well over, but, a bit over 500 trillion. So as I'm counting it up, everything in the world markets that is used for business, all real estate, personal and corporate, there's an accounting term on the asset side: property, plant, and equipment. Property, plant, and equipment. So this is everything the value of, this is so lame to use. It's the old economist thing. The value of your widget maker, which is mostly located in China. The value of your manufacturing equipment. All that stuff would be posted on the asset side. But it's interesting with finance, right? It's like this: the easiest way to count all that stuff up is to add up the liabilities and the equity. Also, another thing, which probably means that this chart is understated, is I have not counted up, sole proprietorship business value here, right? So if you're a small business and you don't have any debt, you're not publicly traded on the markets, I'm not capturing you here in the value. I'm sure there's some agency that, could get to that number, but it's too difficult to count. One other exhibit I wanted to double check. Yeah, so here we go. Here's another thing. Let's cross-check our numbers with the World Institute of International Finance. They usually put out this global debt monitor. No, this is actually, I got mine from this, IMF. Institute of International Finance comes up with 324 trillion in debt. So let's go back again to mine. Let's take off equity and let's take off the money supply. All right, I'm a bit lower than that. But I can explain that I think the money supply will make up the difference there. So again, just counting debt that people outside of banks owe: government debt, corporate debt, household debt. We have this 107, 220. All right. But there's sort of a quick way to get to close to this number, and that is to add the money supply, because only banks and financial institutions can create money. Like you and I can't do it unless we have licenses. So this is a pure liability that's only on the balance sheet of banks. So we add that 162 trillion, and there we get to 223. Yeah, even more, right? Can't even add right now. 392. Yeah. It's possible I'm double counting, actually. If they're as rigorous as they say they are, it's possible that my money supply data is a little bit higher than it should be. But just giving you guys the pure. I'm an open book on how I do this stuff. But this thing, the money supply, only financial institutions can create this. Then you add on the equity markets, and then you have the number. So I'll keep this for now. Good morning, RV. All good, man. Just trying to continue the landscape of where Bitcoin could go. So I think if you look at this chart, and then you also look at the Fedwire chart, and I need to show you another Fedwire chart, which I haven't shown in a while. Let's look at this. And this, 1 second. All right. So if you look at this chart, and then you also look at this chart, which again, this is a flow now. These are flows, not stocks. These are flows. 1.1 quadrillion flows through Fedwire. All right, that's core base. That's only 2/3 of the monetary base, by the way. Another third is the physical hard currency. $1.1 quadrillion worth of money flows electronically through Fedwire a year. Bitcoin, 7. So it's not that Bitcoin can't do it. It's a question of scale and time and power curves. But here's a cool one that I haven't shown in a while. And this shows that we are already ahead of what Fedwire does technically. Okay. So let's go here again. Let's take this off. Here's the transaction volume, which is, it means number, the number of transactions. Back in the 90s, 100, tens of millions of Fedwire transactions a year. Now, hundreds of millions, 200 million Fedwire transactions a year. How much does Bitcoin do with batching, which is an important thing? So there's transactions, which are like 300,000 a day, as most people know. And then there's batching, which are pieces of UTXOs inside a transaction, which you can easily do. Exchanges do it all the time. It's best practice. Here's what Bitcoin does. More. Payment volume. So Bitcoin can technically do exactly what Fedwire is doing. This is, again, super bullish for Bitcoin. And then let's look at Bitcoin transactions per second. All right, it's the right-hand axis, 5.5 at the moment, 5.5. Oh, sorry, that's just actually regular transactions. With batching, it's going to match this. So you can get up to 10.6. And even 12.3, it was up there. And then let's see what Fedwire does down here in black. So Bitcoin already today does more technically than Fedwire, which is super bullish, right? Super, super bullish. But in value, you have to understand this chart as well to see how small Bitcoin is in value. And this sort of rush to the exits in an unorganized fashion, I don't see it happening. As much as I would like everybody to come into Bitcoin all at once, I don't think from this standpoint, technically, it's possible. But to restate what I just said, for Bitcoin to match what the Fed is doing economically, The only thing that has to happen is the price has to rise. Because technically, Bitcoin does what the Fedwire system does. So we already have like major conclusions about how Bitcoin scales here. 20 years from now, nobody's going to be transacting on the Lightning Network. I shouldn't, sorry, not on the Lightning Network, on the base chain, unless you're probably a major economic player. You could call it a bank, you could call it a Fedimint Guardian, a Chaumian Cashew Mint, a Chaumian eCash Minter. Those are the entities that will be transacting on the main chain. Everybody else will be on Lightning or other layer 2, layer 3s. I think the conclusion is pretty obvious if you look at what the system currently does today in the system that competes with Bitcoin. But again, same message. It's going to take time. It's just going to take time. So there we go, guys. Anybody have any questions? It's assets equal liabilities, not assets plus liabilities. Let me know. Let me know. Should we look at the percentile? Good morning, Nancy. I made this chart actually because you guys were telling me about the Jesse's landscape. And I agree with you, for sure. I mean, there's no way it's not going to eat in. The question is at what rate, how fast? That's why I come back to the power curve. Another interesting one to compare would be Bitcoin versus the stock market. Still super small, right? Super small. But projecting out, how that growth is going to look. Be pretty interesting. Point is, I'll update this slide with all the sort of different buckets of value that are here. Okay, let me pull up our every 10th. I haven't even checked the price of Bitcoin, so it's gonna be a surprise for me in the last couple hours. Very exciting. This is wild, though. Could you imagine global equity markets being cut in half today? going from 120, 130 back down to 60. Maybe they could. All right. Pulled into our model, the old power curve. What do we got? $112. Pumping again. This is never going to happen. This is never going to happen. I know you regulars understand this by now. And I think as we established yesterday, it's probably a good idea to not focus too much on the 10th percentile. Really only happened here after this like huge boom. And then this sort of Mt. Gox, this is the first Mt. Gox hacking that happened here. I remember it very well, reading about it, not doing anything about it, but reading about it. As you see, we didn't really hit the 10th much. Flirted with it, but I'll take off the 10th. I'll take off the 90th. If Bitcoin is on a trend, and all the people that say that don't know what the power curve is, but if it is on a trend, never to return, maybe this is our range for the foreseeable future. Of course, the crashing is very unlikely now, in my opinion, because we're clearly bull running up. But there's your 168, 170K by the end of the year. Good question. Probably the most liquid ones, right? Liquid and volatile. Although if you talk to Leon, I forget his name, I think Leon, I forget his last name, the German real estate guy who's been doing probably really amazing trades of levering up his real estate portfolio into Bitcoin. That is taking loans against, using the real estate as collateral, taking it, buying Bitcoin. Maybe real estate comes faster than we think. I love how people say Bitcoin's, too volatile, and like just look at the stock market. You lose half your value here. You lose more than 10% here. You lose 126 down to you lose 25% here. I love that. Is that him? Leon Wankum? Thank you. Yeah, it could be real estate. Could be real estate. I remember what he said at Honey Badger. He said, it could be that speculative development, of course, there's still a room for value-added gains in real estate, which makes sense. But as far as using real estate as an ATM, which a lot of people do in a lot of big cities around the world, certainly in the West, that function, that utility could collapse quickly if people see the value of just holding Bitcoin instead. More liquid, safer. The collateral is stronger. Like you can, if you just imagine, if you tie up, a couple $1 million worth of New York real estate with one bank, you have that bank to deal with. Maybe the bank itself goes bankrupt. There's all sorts of issues that, it doesn't necessarily hurt you if the bank goes bankrupt, by the way, because you already have the money that you took out from the line of credit. But still, it's cumbersome. You have to deal with all this stuff. You got to deal with the banks, reporting and all these things. And with Bitcoin, this is why this industry is blooming so fast. The collateralized lending and borrowing of Bitcoin is you don't have to actually report anything. There's no one cares about your debt service coverage ratio. No one cares about the income that you earn on your rent or the expenses that you pay on your property. The bank or the Bitcoin servicing company just needs to know the LTV, right? That you agree with to be liquidated if it goes to. And if it goes to that LTV, then you're liquidated and you keep the money that you already drew. The bank takes the Bitcoin, sells it, everybody's happy. That's way more efficient than, anything here, any of these debt markets. So it's pretty wild. But no, I don't know for sure. Obviously, what not obviously, I should say. I have no idea which one will go first. Maybe them all equally. How's that for a non-answer? All of these financing instruments are going to continue to grow. I would love to see them grow and then go into Bitcoin. And I think they will. They're not going to go into gold as much, although gold is having a run last 2 years, no doubt. Nobody cares about silver. Can't even see it on this chart. And then, yeah. I don't have a time series for real estate like Jesse did, or art collectibles, but smaller. These are smaller buckets. Real estate's huge, obviously, but I'd be curious more about this number if I work more to find it, like on a time series. It kind of becomes academic when you try to add all these things up because there's things that are cross collateralized. Your asset is someone else's liabilities, but the idea here is, and I know the IMF has tried to do this a lot, is you're counting mutually exclusive buckets, which are these things: households, corporates, governments, and then currency. Anybody else? Any questions? Any thoughts on our? Anybody worried? Where are we exactly? Exactly. Just under trend. Just under trend. A reminder, every time we're, this is not a stock to flow model. This is just very simple. Every time we're above the black line, we pull the black line up, which is great. Super bullish for the long-term future of Bitcoin. Every time we're lower, we pull it down. And we are not the lowest we've ever been. I can show you back again to show you the lowest we've ever been. It was 2016 on a monthly close. Got to go back to this chart. So it's right here. It's the worst we'd ever been is somewhere here. The depths of the crypto winter. It's like we had really strong trends, and then we pulled it down, and then sort of never got out of that. Let me show you here. So here's our evolution of the trend. Again, just amazing how stable the prediction has been, even of today's value, right? But if you go all the way back here, let's take off 2030. It doesn't matter because I'm locked here, but where's my 105? Here it is. That's the lowest. That's the lowest. So what this is saying, number 2, April 2017. This is just before we started to really pull the trend line back up. Right? And we had come hard down from like very aggressive trend lines in the early years of Bitcoin. But going back to this chart, they're both changing, by the way. I have to come back to this every day to show you because they both change as we move forward. So when it says today's projection, it means September 9th, okay? So you see the trend on September 9th is 113,000. 113,000. If this number 2 on this chart, is higher than today's trend, then that means we've actually, we're kind of in the most bearish moment ever of the power trend. And we haven't hit it yet, which is a good sign. It's a good sign. It means the power trend is pretty good. It's projecting out pretty good. It was aggressively high here and here. But again, by the way, as long as we keep moving up, especially at the end of this year, each day higher and higher and higher. I know we're not higher right now, but hopefully we'll be higher and higher and higher above this trend. Then we get further away from this 105, which was like the most bearish trend line ever, that number on number 2, which means the future trend line for Bitcoin is more optimistic than that. So it's great. It's a good signal of like, this will be peak bear, and probably it might even happen during the next bear, is where something to keep an eye on, basically. I hope that made sense what I was trying to say, but this power trend line adapts every new day's worth of prices. So and as Tim from Australia was pointing out yesterday, you're still getting a worst case if you go out to 2030. Not even looking at the best case or the more likely good cases, which gets you up to number 8 there. Base case, 555, 560. Worst case, 250. And if you bought Bitcoin today at 112,000, sold it in 2030 at the worst case that it seems the power trend's going to put in, 250, that's still throwing you a 18% return compounded. Way better than any market you can get today. So again, these are I know I repeat a lot of this stuff. I'm sorry if I'm a broken record for a lot of you guys, but these are the things that help our sanity and make us understand that this is like by far and away the best market we can get as far as, asset protection. What is a sailor syndrome? I mean, I get the sentiment, but I don't exactly. You mean you'd be worried that you'd have to liquidate? Never enough. Sure. Yeah, so yeah. Good point. Well, I won't go into all the buy high, sell, paging Dr. Freud, to all the buy low, sell high options you can do with the power trend. But hello, put call ratio. Have I checked out the stock to income model? No, I haven't. It's on Twitter. Is it daily income of the Bitcoin network? Because I could definitely make a chart that way. I'll search. Send me a link if you have. Although I can't do the links with this software. I'd have to get on YouTube, which is, sorry, annoying, but I'm looking. Is it income of treasury companies? Not exactly seeing it. Here's one. But this is back in June. Send me a user who I can search for, and I'll go for it to look. But if you're talking about the market cap divided by the daily income of Bitcoin, I have something pretty similar, which is again, I smooth it out because I think you need to smooth out I smooth out the income, not the market cap. So here's our PSR. Did I do PSR every 10th? I don't think I did. Here's your PSR. Price to sales. One second, pulling it up. Pulling it up. Do people just lose me? Can you hear can people hear me? Hello, hello? I got some people saying no audio. YouTube people can hear me. Can Twitter people not hear me? I'll check it out. I have not seen it. Put call ratio. YouTube people can hear me for sure. Anybody on Twitter? Tamam, he says you can't hear me. Hello? So here is this is based on the revenue that miners earn, okay, in Bitcoin. And I think it's a pretty good model. The regression's not great, 70% R squared, but this number is how many times the market cap is over miner revenue over a trailing 12 months. Okay, so there is no price on here. You got to imagine where price could be, but here price was 20K. Let me take this away. Here price was, this is never going to happen again. 20K here, all right, in 2017. And here is, notice, I've said this before, notice how the scam top didn't matter here. It was very much picked up the first top, but the second top did not get picked up in 2021. And then here we are today. So again, not hot at all. I don't think I have an every 10th for this, but these are the top 90th percentiles. We've always been there in a bull. And this interesting look, this metric, unlike my straight on the price, we get to the 99th, even in 2021. So I like this metric a lot. We got to the 99th every single bull. Actually, here you might have gotten faked out. It's not always perfect. Because here, I need to show the price on this. Price was, 200. Then it fell to 60. Then went back to 1100 here. So, but it caught the general tops very well, and we're not even hot right now. This is always going to be 1 day late too, by the way, because of the data. Yeah. You got me now, Tamam? But just to this PSR is price to sales, which I think is the cleanest way to do price to income on Bitcoin. So that means right now the market cap of Bitcoin is 140 times higher than miners make in a year on a rolling trailing 12-month basis. It's above trend because trend line is 85. So it's above trend. It's hot, but it's not as hot as it has been in prior cycles. All right. The top, and this number will keep kind of rising too, so it's hard to say, but we got to 115x in 2017 and 2021. We got to 170. And technically we could get to, 300 this time. So I'll keep coming back to this chart as well. I think this is a very good one. And again, days above the 90th. Look, very clean chart. 4 months. Days above the 90th. Actually, not as clean as I thought. Hopped in and out. May to January. But the nice thing about this chart is, there's no secret to life, guys. But this one cleanly called the top and then is like, okay, you might want to sell, like exit indicator. But of course, here, if you were really getting nervous when it was here and here, you know, you would have missed the gains that were to come. So trailing stops are difficult. All right, guys. I think might be it for me today. I just wanted to get this out here for you. New chart. Inspired by Jesse's chart. Only critique I would say to him is you got to cap it on, you count one side, not both. You can count them all as far as an idea of like buckets of wealth. But Bitcoin can't be all the assets plus all the liabilities. It could be all the assets and all the liabilities, I guess, in value, but it can't be both. So this is the, I know it sounds weird, but that's the accounting identity. And yeah, so instead of a quadrillion, I would say roughly 500 trillion. And we got a while to go, no matter what. I got to cut it here, guys. Got some other stuff coming up today. Hope everybody's doing well. Back to school. Thank you for watching. As always, let me know if questions, comments, and I'll talk to you tomorrow. Thanks, guys.